Welcome back. Take out your pencil. Good earnings from economically sensitive companies translate into a better economy, and that translates into a better stock market. It's pretty simple, but a lot of investors are still taking shortcuts instead of singling out individual companies. That's according to my next guest, Laszlo Birinyi, who runs Birinyi Associates out of Westport, Connecticut, and he joins me by telephone. Laszlo, welcome back to Bottom Line. Always good to have you on.
Thank you.
Laszlo, why are they taking shortcuts?
Well, because that's what people are selling. We're floating all sorts of ETFs. We're floating all sorts of packages and programs and funds which enable you to do something without too much heavy lifting. And therefore, the inefficiency seems to be actually go out and pick individual stocks.
Yeah, I was going to say, you still believe that stock picking at this point, it presents the greatest opportunity for investors?
Well, when you look at the data, I mean, what we did was looked at the last 3 quarters, we found out that half the S&P stocks outperformed the index by almost 100%, and that's that's pretty compelling evidence.
And we also have a chart. It's a variation chart, and it kind of shows what you're getting into right now. The chart shows that at least from, what was it, June 30th of last year until March 31st of this year, we see that variation, and we're looking at it for our viewers. We're looking at that on the screen. Why so much of an outperformance?
I'm not sure. I think that, again, because this is not what people are doing, and therefore you have this inefficiency. People are trying to, again, buy energy instead of realizing that there's individual names that are doing much better. I mean, I'll give you one example. In the health foods area, or whatever you might want to call it, you have a stock like Weight Watchers, which is up about 90% this year, and then you have Nutrisystem, which is down about 20%. Coke has had a good year. Pepsi has not. The market's reasserting the fact that it is a market made up of individual components and not a uniform, top-down entity.
Is the market expensive right now, in your opinion?
I think not. I think the conventional view is the conventional way of looking at multiples suggests around 14, 15 times earnings, which is hardly expensive. There are, however, a lot of expensive stocks which are not having a especially good day today, but I don't think overall the market is in the red zone.
What do you think is going on in the market right now? Is it just a function of QE2, or is something going on here that we don't know about or we're not putting our finger on?
Well, I mean, I think the first thing is you're in a bull market. And in a bull market, the market goes up. And people want to find some real tangible reason. And sometimes the reason is just that, it's summertime, and summertime is going to be warm. There are some things today. You've had some significant earnings from very significant companies. Cummins Engine is giving us a good insight into the general economy. Ford suggests that manufacturing is doing pretty well. The IBM news was certainly salutary. So I think that good environment, good news, it leads to a good market.
And you talk about Cummins, but there's also some other stocks that you like, and we should point out you're not necessarily saying this is a strong buy because you've been talking about these on Bloomberg TV all year, haven't you?
I have. We've tried to be consistent, and we still continue to like 5 names in particular that we've talked about.
And the one we have on the screen right now, Polo Ralph Lauren, why do you like that one?
Well, we like stocks usually because we look at a lot of things like supply and demand, and there's just been a lot of demand for the stock. They've been apparently ahead of the curve in terms of buying their materials, so they've got their costs under control. They opened a new store in New York, which apparently is doing very, very well, and it's a solid brand, and it's a name which people are comfortable with, both from the merchandise but also from the stock.
Yeah, another one you like, Priceline.com. Tell us about that one.
Well, I wish I knew. Stock that we picked up on a while ago. It's far exceeded any hopes we had for it.
Yeah, right now we're looking at the one-year chart up almost 97.5%.
Yeah, again, we have bought and sold it quite a few times, almost always at higher prices than where we sold it. But there are some stocks which are in the midst of magical mystery tours, and we watch them very, very carefully, and we're not quite sure why some stocks get so enamored, but Priceline certainly has been.
If you don't mind, let's talk about one more, because I was looking at it as well. Hermes International.
Well, Hermes International is more of a longer story. I mean, it's a quality company. I think it's one of the they have a unique niche, top end of the luxury market, and I certainly think it's sort of a win-win situation. They're embroiled in a potential battle with Louis Vuitton. And Louis Vuitton takes the pressure off, and the company goes back to fundamentals, which are very strong. Yeah. And if Louis Vuitton were somehow to gain control, that would be positive for the stock. Not necessarily the company, according to the company, but certainly for the stock.
Laszlo, if I might ask you in our last 30 seconds, any thoughts on Fed Chairman Ben Bernanke's press conference tomorrow, his first ever? What is he going to tell folks?
Well, I suspect he's going to tell us more of the same, I don't know if maybe today's rally is the anticipation of some good news, but you know, what we've seen in the last year about what we expect from the Fed and what the Fed does, we haven't really been very right about it, and we've been surprised, and unfortunately, I think that what it's tended to do more than anything else is cause some short-term volatility, beyond that, I have no expectation.
Laszlo, if I might ask again, how fine a line does Mr. Bernanke have to keep between discussing Fed policy, Fed transparency, and not becoming too political?
Well, you know, I really don't know, because it's not so much Bernanke. It's going to be the interpretation thereof, and we're going to have quite a few people throwing in their views, both on Bloomberg and also on the 473 blogs, not to mention editorials. So I think it's just how people interpret it, and I would be guessing, and I found that guessing is not a good way to approach the stock market.
All right, Laszlo Birinyi, Birinyi Associates, joining us on the phone from Westport, Connecticut. Laszlo, always a pleasure to have you on. Thanks so much.
Okay, thank you.